Hi, my name is Ben Jones and I'm an analyst at Dorsey Wright and Associates. And today I want to talk about demographics, or more importantly, age. Now, this is now a hot topic in U.S. media due to the events in the Middle East, especially in Egypt and Tunisia. Because what we're seeing, or at least in the event of Egypt, is this young population around the emerging markets and an aging population in developed markets. And this could be a crucial component of that battle between emerging versus developed, that arm wrestling match that we always talk about. And it's interesting because when we look at Time Magazine's cover, the most recent edition, it has to do with this very topic. It says, "The Generation Changing the World." And it has a group of young Egyptian activists who were at the center of the political unrest and ultimately that revolution that changed Egypt's government. Had to do with this younger generation, almost my generation. And so what does this really mean? So what we did over this past week was we did a quick study using various sources such as the CIA War Factbook, the United Nations, the World Health Organization, the World Bank, and what we found we're trying to determine the overall age of the emerging markets, of the developed markets, by looking at select countries. And so what we did, we ended up looking at the median age across the emerging and developed markets using a couple ETFs as our universes of choice. So we used an emerging market ETF and a developed market ETF. And what we did was we just looked at the top 10 countries or what weightings in that country in that particular ETF. So when we looked at it, we looked at the ACWI. And it turns out that Japan actually has the highest median age at 44.6. The United States actually has one of the lowest median ages out of this particular group, or the developed markets, at 36.8. And what we found was the average median age was around 40. Now, the median age, it gives us a good representation about the middle of the pack. Over half of the population has an age over 40, while under half of the population of the emerging markets, developed markets, has an age below 40. Now, when we look at the emerging markets, we find something different. There's a big difference here. When we look at, let's say, Russia, which is an emerging market, it has a median age about 38. Now, that just falls right in line with the developed markets. But when we look down the list, you can definitely see that the emerging markets have a younger population. For instance, South Africa has a median age of 24.7. India, the second lowest, at 25.9. Malaysia, 26.5. Indonesia, 27.9. Brazil, 28.9. So it comes up to an average median age of 30.92. What we found to be really interesting about this demographic study was, where does China fall in all of this? Well, as it turns out, China has a relatively high median age for its market. And if you think about it, China has a median age of 35.2. That's higher than the average age for this particular study with the emerging markets. And it's higher than the median age for India, which, as I said earlier, was 25.9. And Bloomberg Business Week actually did a study and actually wrote an article about this back in January, and they say that this difference between China and India could have an impact going down the road. And let me read a quote from this particular article. "The surprise winner is India, which, despite its red tape, corruption, and inefficient politics, will eventually surpass China's GDP growth rate. Both banks project," and they're using some major international banks there. "China's top-line GDP growth will be inhibited by its one-child policy, which will cause its working-age population to shrink starting in the 2020s. India's working population will grow throughout the forecast period," the bank predicts. So as we see India's working population grow, we could potentially see more output. And typically when we compare emerging versus developed markets, you normally see more investment in the emerging markets in terms of the industrial sector, manufacturing. While we look over to developed markets, you're going to see more healthcare investment down the road. At least that's what some organizations predict. But here at Dorsey Wright, we just rely on the technicals. So we just thought that you might find this study interesting. It definitely shows you a really stark difference between emerging and developed markets. And more importantly, it paints India in a favorable light. So going forward in the next 2 to 3 decades, this younger Indian population could be really that spark plug for further growth and prosperity. So let's look at a few stocks in India that are worth considering today. And as a result of this theme that we were looking at, I wanted to pull out some industrial stocks. So we'll look at 2, and their technical pictures have improved since this last correction that we've seen since really, let's say, December and throughout January. The first stock is Rassi Electrodes Limited. This industrial stock is trading in a positive trend. It's a 5-for-5er. It broke a double top buy signal earlier this week, and it continues to rise. We just saw it reverse up into X's yesterday. Near-term support at 24, long-term support down around 21. Okay to buy at the market. This stock possesses strength. Another industrial stock that we want to look at today is SKF India Limited. Broke a triple top buy signal at 550 as a result of that 5-day rally we saw. It has support down there around 510 and that 500 level. Near-term stop potentially around 500. So these are 2 industrial stocks that you might want to take a look at. So going forward, we see the CNX Nifty, has bounced off of its low, holding support there around that 5,200 level that we talked about. So check out StockEasy.com. Listen to our podcast, and if you are interested in ETFs, go to www.alletf.com and check out all the valuable resources we have there at your disposal. So we'll talk to you next week, and have a great weekend.